minutes. Hey, everybody. Welcome to another episode of the System2 Podcast. Today, I have Andrew Smith on. Andrew is the managing partner and co-founder of the Savory Fund. He has 16 years of experience in the food industry with a focus on scaling high potential restaurant concepts into multi-brand units. They specialize in taking QSR, fast casual, and casual dining food and beverage concepts with between 2 and 10 locations and scaling them into 50 plus unit regional brands. They've successfully closed 2 funds of 100 million each, and Fund 3 officially launched in 2014 with a $200 million target. Hey, Andrew, thanks for being on the podcast.
Thanks, brother. Good to be here.
So why don't we just take a step back from the professional side of things? What's your story? Who are you?
My story is that I'm a Chicago boy. I grew up in Evanston, Chicago, and then moved out to Elgin. So I was a suburb of Chicago. My father was a dean at Northwestern Dental. And so that's why we were in Chicago and in the city. So I grew up in Chicagoland. I loved it as a young man. I enjoyed the best of the 80s in the Chicagoland area. I was born in the 70s, but enjoyed being a teenager in the 80s. We had the best sports teams, if you can imagine, Matei. We had, the Bulls at the same time as the Bears, and we had the Cubs and Sammy Sosa, and we had Michael Jordan and Walter Payton. It was just the best time to be in Chicago growing up as a kid in the 80s. So I had a great childhood. I'm one of 5 siblings, 3 boys, 2 girls, and we had an incredible childhood. And I found myself at a crossroads when I was graduating high school there. I played sports growing up, but I was like, do I go to Northwestern where my dad's a dean, or do I get out of the city and go somewhere else and try something different, be on my own branch? And so I decided to move to Salt Lake City, Utah, where I had some cousins. I had visited here several times during summers, and I liked it. And so I came out here to go to college, and I've been here since 1992. So that's where I started my life and where I was born and raised, and I can't say enough good things about my past.
What was that transition like from Chicago to Salt Lake City? It must have been pretty different, especially back in the 80s.
Yeah, it was very different, and I will say it's even more different as I look back to when I even moved out here. Going from a big city, millions of people, to Salt Lake City, Utah. I mean, they call it Salt Lake City, but I don't know how much of a city it is. It's kind of a town with like a couple buildings that are taller. But there was these 2 towns, which was Salt Lake City, and then you would drive 40 minutes south to where Brigham Young University was, and then Utah Valley University was. But those were smaller schools at the time as well in 92. But you fast forward to today, and I know that we're not talking about this moment in history now, but you go fast forward, and everything in between those 2 places in these valleys is now filled in with people, businesses, and industry. And it is an unbelievable ecosystem here in Salt Lake now, where more and more dollars, businesses, people are moving to. So it was very different going from a big city to a small town and city to now this is becoming big city. And I'll tell you right now, Matei, when you drive around on the freeways, you realize it's a big city because there's gridlock just like in Chicago or LA or New York now here. So
It's amazing though to have been part of that growth, and yeah, it sounds like your personal story was also tied to some of this like economic development in Salt Lake City. So walk us through that. Did you know you wanted to be an investor, be in the restaurant industry as a kid, or did you have any sort of entrepreneurial tendencies back then?
I was definitely more of an entrepreneurial mind. I remember my father had asked me, what I wanted to do in my career. And I said, well, I know for one thing certain is I don't like blood. I don't want to see anybody in a gory position on a table, like he was fine with. My older brother, followed in his footsteps. He's a dentist. And I don't even know if I could look in someone's mouth every day, but I respect both of them. And then my sister went off into medical as well. But I knew I was going to do something more businessy because I liked to talk to people, not look in their mouth or their corpse. And so I knew I was going to be something in business. When I was going to school, though, my story kind of started very different than what people think about me. When I tell them I was in the tech industry for 11 years prior to the food and beverage industry, it kind of blows people's minds because they're like, wait a second, you were in tech and now you are in food? And I'm like, yeah, I know it doesn't make a lot of sense. But I actually started my first business as an entrepreneur kind of by mistake, I would say. I was living with a couple of roommates. One of my roommates was a software engineer, a major. I was business major, and he came home one day and we were watching a commercial, Matei, and it was a Jaguar commercial. It was showing their new car, that they were releasing. And he said to me, he's like, what do you think if I could put that commercial on the internet You think people would want that. And back then didn't exist in 98, right? It was like the internet was so early on. And so that does age us a little bit, Matei, like you and I talking here, it does age us a little bit. I said, yeah, I think that if you could put that commercial on the internet, it would be pretty amazing. And he said, what do you think they paid for that commercial? I'm like, I don't know, probably several $100,000. So he went off and worked on it. And about 3 months later, came back, opened up his laptop, which was a big chunky thing back in the day. But he pulled up the internet and he showed me that commercial we had saw that day on the internet. It popped up on the internet. I'm like, what the hell am I looking at? And so he says, well, I did this and I built this codec and I have this code behind it. And this is how we're chopping it up and then serving it up and stuff. I'm like, this is amazing. Talked to our professors. We figured out how to file for a patent. And then you would do what everybody would do. And that was I started calling Jaguar. And I called him and called him and called him and called him and called him. I probably called him 400 times a day. And I finally got someone in the marketing department to pick up the phone and respond to me. And I said, let me send you a link. I want you to look at something. I sent it over to them. You could hear the commercial over the phone. And remember, Matei, the phone had the little cord like this onto the wall. Okay. So it wasn't a cell phone. And they say, well, what am I looking at? I'm like, well, you're looking at your commercial on the internet. And they're like, I know, but how? And I said, well, that's our technology and whatever. And they said, well, how much to use it? And I thought what I heard in my ears was, how much to buy it. I'm just this poor college mouse. And I just made up a number. I'm like $125,000. And they said, okay, we'll get right back to you. I'm like, oh my gosh, I think we just made $125,000. Called back and they said, okay, we want to do it. How many times do we get to use it? I'm like, wait, that's just to use it? And they said, well, yeah, how many impressions do we get? How many times can we serve it up to our customers? I'm like, I don't know, 5 million times. And so I just made up another number. Like, great, let's do it. Let's give it a test. Hung up the phone. I'm like, I guess we got a business. And so that was my foray into entrepreneurship, to my first business, what we built with some professors to figure out how to set up an entity. My first client in my first business was Jaguar USA. And so my second client, BMW USA. Third client, Mercedes-Benz. Fourth client, Citibank. Fifth client, American Express. We were shooting fish in a barrel on creating their commercials on the internet, and we had a business. And so that was my first foray into technology, first foray into entrepreneurship, business ownership. And I learned along the way. It was a crazy ride.
That's so insane. Like where were these ads getting displayed on their own websites, or where were they being played?
So they had their client database of people that would come into a showroom, and then you and your wife would be like, well, we're interested in this GL Mercedes or whatever. You'd put your information down and then you ended up not buying it, but they would keep your information. So they had tens of thousands of people. They would serve it to them via email. So they would get an email and it would play in their email, or it would be a link in their email that they would click to see it. It would pop up on their screen, play, and then they could click it and say, I want to reserve a test drive. And then they would set up a test drive and everything else. So extremely successful, because I think we were getting like a 17% click through. And you and I know that if we send out like a mailer to people's homes, it's like less than 0.2% success rate. So we were blowing people's minds that they could use this and they could get something above a double-digit return rate. So it was, like I said, it was shooting fish in a barrel. We were signing people left and right. We raised a little $3 million tuck-in round of VC, which was my first foray into raising money in VC. And yeah, we grew it from 98, 99, 2000, 2001. We grew to about a 55-person team. I started seeing other competitors out there that were doing streaming media. One went public, another went public, and I'm like, maybe we should go public. And so we started going through the process of tempting our fate with going public. We had revenues that were larger than some of the others, and they had already gone public. And so I'm like, yeah, let's give it a go. I'm 26 years old, and something happened in 2001, 2002, and that is that the dot-com bubble popped. And I thought my whole life was over because I had seen these gigantic inflated numbers of what we were worth. And the nice thing, and something that I learned early on in my business career, was that you have to have a business that has good fundamentals. You have to have clients that like your tech or your service, and they have to be sticky. They have to want to stick with you because you serve them up a software or a technology or a service that is part of their business that they lean on. And because we had that, and we had these big companies, they stuck with us. We lost some clients, but they stuck with us through the dot-com bubble, and we still had revenue. So we survived the dot-com bubble. And one of the public companies that was my competitor called up and said, hey, the market's consolidated. Why don't you let us acquire you? And I'm like, let me think about it. Ultimately, our board decided that's probably a good option. So we ended up selling our business to the public entity. The public company was based out of Huntington Beach. It was called Mind Arrow Systems. And I was a public company nonetheless. And so I was the VP of sales of a public company at 26 years old, reporting to the street. It was still a success. It was still a win. I still learned so much. It wasn't as much money, Matei, as I could have made if I would have hit it before the dot-com bubble, but it was still great nonetheless. And it was a win. And I was so grateful for that whole experience.
Talk to me more about that, because I mean, you can argue that even for the past whatever couple of decades where interest rates have been close to zero, you've seen crazy valuations, and yeah, there's some corrections here or there, but there's the markets are constantly pushing new highs. Like, how do you think about that when someone sees that they're worth a lot of money on paper, and then when that doesn't materialize, and it sounds like you still had a good exit, but was yeah, like part of you bummed out about it, wishing you'd have held out longer? Like, how walk me through the
Yeah,
psychology.
I think that, for me, I look back in my career now and I think, man, what if I would have gone public before the dot-com bubble? Well, I would have probably had tens of millions of dollars more, right? What would have that done to my life at that point? Would I have taken a different trajectory where I wouldn't have started my next company that was tech or my next one? Or maybe I would never have gotten into the food and beverage industry, which that whole story, which I'm sure we'll get to, has been a huge blessing. And it's also been an unbelievable success. So I just think about all of the things I've learned from that and how I've parlayed that into my new businesses. And yeah, bums me out, but does it make me feel like I missed something? No. When the moment, yes. I mean, it was a complete bummer. But then we sold and we still had an exit, and I was happy for my investors and from my family and for the people around me that had been with me the whole time, for their families. But no, I think that I look back and say I'm glad that it's worked out the way it has, because I learned so much through that experience that I parlayed that into the next and the next, and I continue to do that now, even now. But I got to be honest, the whole dot-com bubble, it made sense that happened because people were overinflated in values and they didn't have true tech, or they had vaporware, as they would call it, if you remember. And we had true tech. And I think that people have become smarter and they're being more disciplined and looking at the undercarriage of a business to say, what do you really have? Is it vaporware, or is it something that's actually a tangible IP asset or code base that they can invest into? I feel like there's some of that going on now. If we wanted to jump around a little bit, I feel like there's some of that now, let's say, because I think that the AI revolution is happening. We're all seeing it around us. I think the valuations on those companies that have no revenue yet are ridiculous. And because of that, I feel like we're kind of going into this era of maybe .com 2.0. There's going to be a reckoning. You can't pay someone $1 billion value on something that has not been proven yet and has no real client. Will there be some generational changing AI companies come out of this era? Yes. Will there be a lot of dead bodies on the side of the road as far as companies go? Yes, just like the dot-com bubble arena, because they're just vaporware.
Yeah. I'm also curious about like the first sale you got to Jaguar US. And I'm always fascinated by, especially when people start companies early on, like you don't have a reputation. You're just starting out. And somehow you end up getting some clients, and then you end up getting more and more clients from that. It seems like there's an element of either, there's a technology thing, or there's some element, at least like for me, about like fake it till you make it, where you're going out there like, I have all this stuff. It's like, well, there was a lot of like, elbow grease on the back end, then like more of that and less technology when you're going after your very first client. And yet you end up like succeeding with this. What advice do you have for people that are starting their first business? And it's, you want to get a client like that. And it makes total sense. Once you get like Jaguar, to then get the other guys makes perfect sense. But to go from that 0 to 1, how do you do it?
Yeah, it's a great question. And I would say that experience has helped me give advice to other entrepreneurs that are just starting out. And I said, we were lucky to go out and harpoon like a Moby Dick right at the beginning, right? Like everybody wants to go harpoon the big whale to just make them known. It doesn't happen very often. Like I've been part of other tech companies. I've invested into a bunch of tech companies, and they're always looking for that big whale. And I always tell them, listen, you need to be out hunting for the whale and working on harpooning your whale. But you need to spend about 90% of your time on getting the right size client that's going to grow with you and that's going to prove you out. So we were lucky to get that, but would that have deterred me if we didn't get Jaguar USA to get another smaller business to prove out what we had? We probably would have done that, but because we had a Jaguar commercial, that's why we went after them. Would that have stopped me? No, but we were just fortunate to get it. So my advice to everybody is 0 to 1. That one can be Moby Dick. It can also be a shark, right? Like go get something that's good. Doesn't have to be great. The most important thing is learn what you got and then understand once you know what you have, then go out and find others that you know that need it. You have to parallel yourself to what the industry or the market needs and sell to those people. Don't be something to everybody. And so the 0 to 1 is important. I think the most important is 1 to 10 to make sure that you keep the 10 so that you can get to 100. You can't keep 1 to 10. You don't have a business. If you have 1 to 10 and you have attrition of 9, you don't have a business. So 0 to 1 is important. You don't need the big whale, but always be hunting for the whale, because if you get a whale, you could go from 100 to 10,000 pretty quick.
You said you called them like 400 times.
I
What made it so that like you didn't give up when you kept hearing no's or people were hanging up on you? What made you pick up the phone one more time?
It was the belief that my tenacity and grit would pay off, and it did. I didn't give up. I think that was the first time I realized, you know what, I just keep trying until I find a way, right? So that's just in me. I think that I finally believed that that's what gets an entrepreneur to actually work and tick is I'm not going to take someone not answering as a no as my answer. I'm just going to keep going until I get someone on the phone to tell me no. So I think that for all entrepreneurs, we all either have to have a little bit of that crazy hair of grit and tenacity and perseverance that the other person doesn't have. And that's what separates the have and have nots as far as brands that survive. The brands that survive are the ones that have the tenacity and grit to say, I'm going to just find a way through. And I just think that I had that at an early age, and I didn't know I had it until I tried it. And once I like, man, I really don't give up until I get what I want. That's kind of how I've been through my whole career now. And I tell every entrepreneur, just keep going. But I also tell entrepreneurs too, like if you keep going, and no one wants your product, do something different. Like tenacity and grit doesn't always make a product or a service or a company work, but tenacity and grit will see all the opportunity with that product or service through before you say, okay, it's not this one, I'm going to go try something else. But I just think it comes down to just perseverance, tenacity, and grit for any entrepreneur. If you don't have it, I'd go get a job and learn as much as you can and maybe come up with an idea later. But if you don't have the grit to say, I'm going to go and call someone 400 times until I hear no, it's probably not going to work.
And it sounds like there's also this element of you had some very big goals for the company, like you wanted to go public, and then you guys got acquired and you were now a VP at this publicly traded company. At what point did you decide you wanted to do something else, and what was that next thing you did?
Yeah. So I was part of the public company. I went 3 quarters reporting, and I realized, wow, you realize a lot about who you are and who you are not when you're an entrepreneur as you go through the journey. And you understand what you're good at and you understand what you're not good at very quickly because the people around you tell you that or you see it. But you also learn what you like and you don't like. And the thing that I didn't love is I didn't love the public setting where every day I woke up, I felt like, well, I have to do this so I don't make people in the public that I don't know their face or their names. I just know that there's this nebulous cloud of people that are either going to respond favorably or not to what I say or what I do with my numbers. And so I didn't love that. I love the camaraderie and the grit and the galvanization that you can have within a team in a private company. And then you don't have everybody that you don't know who it is critiquing you. And so I already knew having gone. So my next company I started, I had gone and I'd assigned some of my capital to an RIA, to a registered investment advisor, so a wealth management firm. And I said, great, here's some of my money. I'd love to have you manage it. Can you show me where this is at, and this is at any given time for me? They're like, well, no, we don't have software for that. I'm like, you don't have software to show me where my money is and how it's doing in all those different buckets? And they're like, no. I'm like, oh, I'll build that. So I got a couple of my developers that worked for me in my prior company. I said, let's go build this. Essentially, it wasn't called that back in the day in 2003, but BI, a Power BI business table that we could show RIAs clients like myself all of their investments in real time. And so we built a company out of it. And once I had the code base built, I left my first company and we started our next company. It was called Money Wizard. And I sold it to RIAs and it was shooting fish in a barrel because there was nothing that existed like it. So I was selling it to RIAs for about 1.5 years. And I had a large RIA come to me in Michigan and said, this is something we've been looking for forever. We don't want anybody else to have it. And I said, well, that's not your option. You can either license it and use it like everybody else, or you can buy it. And they said, well, we'll buy it. And I'm like, well, what's your price? And they gave me a price and I'm like, and now you own it. So I sold it to my client and they had the exclusive on it. Everybody else could use it that had it, but I sold it to them. I took the bird in the hand. So that was how the next one happened.
There's so much about life, about this kind of to your point about just like discovering things by, and you'd have never been in that position if you hadn't actually had a great exit before
That's right.
to then see like, oh wow, it's actually, the downside of having all this money is that I can't actually see it all in one place, and I'm
What's
able
it
to do
doing?
it.
Where's it going?
Exactly. Like I worked so hard for this and I just like give it to somebody and I'm supposed to take their word for it that it's still there and like, I
Yeah.
have to check in. And so it's like, it's really interesting to see how, as you progress through life, where it's like one opportunity basically begets another, that you then identify challenges as to how that can be done better.
Well, that's why a lot of times people say to me, and I'm sure that you've had this question to you too. It's like, how do I come up with a great business idea? And I'm like, live life. Just go out and experience. Like, if you don't have an idea, go get a job and see what's going on in the business and go, man, I think that there's probably something I could do here in this business that could be a business for other businesses because it's a gap that we have. And that might be your idea. But I always tell people, like, just go live life. Don't sit in a room and start coming up with ideas. I mean, you can, but without experience, you can't really create anything. That's how I started my third business. Do you want me to tell that now?
Yeah, go for it.
My third tech business, I I built this beautiful home and I was excited about my new home. And, I had the starter home and the condo, when I started my first company, and then I had my starter home, and then I had my opportunity to build a nicer home. So I built this beautiful home, and I had just sold my tech business for RIAs, and we had just finished our home, and I'm doing my walkthrough with my builder and his project manager. And I said, there's like, well, so this shingle has a 20-year warranty, and then this paint has this, and this carpet has that, whatever. I'm like, great. Where is that information? Like, where do I find that? And they're like, oh, it's all jammed in that drawer. And then there's like, your water heater, and then the manual's on top of the water heater. And if it gets lost, you're screwed. And then, if you need to know how to use your dishwasher, we don't know where that manual is. I'm like, that is the dumbest thing I've ever heard. You're saying that I just spent a lot of money on this home, and the way you're giving the information to me is less than anything I've ever heard of in my life. I can go buy a car and get this perfect manual on everything on the car. And yet I buy something that's 10 times more than a car and I get nothing. And they're like, well, that's just how it is. I'm like, that's stupid. Got a couple of my developers that I knew in my past life, and we put together a system to index all building materials in a home, all of them. All appliances, manufacturer data, use and care manuals, warranty information. And we built a system called the access point, which is the point of access between homeowner and home builder and manufacturers. And we called our system the home profile. So it was a profile of your home. And when we would go to a builder, we would go to Smith Builders and say, Smith Builders, when you're building a home for Matei and his wife, at the end of it, all you have to do is you have to go into our system, and all of the stuff will be indexed. And then you have to just say, here are the materials that we put into their home, and my system will suck all of that into one profile where it will be online, and will print it custom for you. So you can go and you can hand them this beautiful manual with all the items in their home when you close with them. And it just blew builders' minds. And so I funded it initially. We started shooting fish in a barrel because we had no competition. It didn't exist. And we ended up raising tens of millions of dollars with some of the largest private equity firms out there, had about 180 employees, had 2,800 home builders and tower builders across the country and in Canada. And I created that because of an experience I had of having built a beautiful home and seeing something that was the dumbest system I've ever seen. That's how I created that one.
Yeah. It reminds me of, if you listen to interviews with comedians, a lot of the good ones talk about them going through the world with an eye of like some of these things are ridiculous. Yeah, like that's
That's
ridiculous.
so dumb. Yeah.
Yeah. Yeah. There's like, and then they make a joke about it, but some people take that same observation and turn it into like a company worth a lot of money. Do you find yourself like going through the world, like just picturing like Larry David and Curb Your Enthusiasm, like everything
Larry
sucks?
David.
You're just like, yeah, like, oh, this thing could be so much better. That thing could be so much better.
Yes, I do. I look at things all the time. I'm like, someone should fix that. That's really inefficient and stupid. Someone should fix that. That's really inefficient and stupid. To be honest with you, right now, I have my son. He's 25 years old, married, in college his last year. And he's saying to me also, hey, Dad, I don't know if I want to be in the food and beverage industry. I'm like, you don't have to be. And he's like, I not necessarily want to be in tech, but I have this idea. And I said, well, what's the idea? And he said, I want to journal more. And I'm like, yeah, I want to journal more too. He goes, I know everybody wants to journal more, but nobody knows what to say. They sit down and then you have writer's block, or people don't make the time to sit down and type things out. If you voice the text, you just kind of don't know what to say. So I want to build the first, because it doesn't exist, the first ever AI journal where you can just talk and it interviews you and gives you ideas what to write and then have it create you a page. Matei, he's launching it next week after 8 months of building it with a designer and a coder. And it's unbelievable how well it works. And now I've been using it, beta testing it. And I'm like, why did someone not think of this before? Because you don't journal because of all those weird things. Now I look forward to just talking, and then it creates my journal page perfectly with perfect grammar, and it doesn't exist. So that's the type of stuff that you got to come up with is, why doesn't it? Maybe that's a business idea, and then go for it.
And I think the other element to that is like, you were, from what you're describing, you were lucky that you knew developers, right? And every of the three examples that you gave, like, oh, I brought in some developers I knew, and then I did this thing. And for people that don't have it or don't have enough money to do this, I feel like we're now at the age of vibe coding where you can have anybody with an idea and you're able to quickly create these problems. Now, I can definitely see, like one bull case for this whole like AI craze is that you have these one-off entrepreneurs with like random one-off problems that they go out and solve that otherwise, like, because there's so many ideas. As you were just talking about, there's so many other things that you want to do, but you just don't have the time or the resources to do this. Just even like personally, I think it'd be awesome to get to a point, but like, here are some like 10 random shower thoughts that I've been thinking about that someone should start a company doing this. I don't have time to do an AI agent. Go make me a business for each one of these things and
Yep.
go nuts.
We're getting to that point where I think that the world's going to be that. The whole thing about AI that we learned through building this AI journal, though, is AI does have its limitations, right? Like it's still figuring itself out. The engine itself is so brilliant, getting smarter, but then using it for like everyday life, people are not understanding how to use this other than ask it dumb questions and have it come up with things or write something for them. But to actually have real life applicability, I think that there's going to be a lot of companies that use the engine, but for applicable ways that all of us can use it as a layman. Be a brilliant person to use AI. AI will not exist if everyone in America has to be brilliant with tech. You got to use it in a way that's consumable, applicable, easily accessible, but then use the AI engine. And I think that with my son and his AI tool for journaling, that's a perfect example.
So how did you get from tech companies to restaurants?
It's a random, crazy situation. So my wife, my two boys were toddlers at the time, 2007, and she came to me one day and she said, "Hey, I'd love to do something more than just be a stay-at-home mom. I feel like I have more to give, and I'd like to do more in my life. My number one job that I love is to be a mother. I love it, but I feel like I can give more." And I'm like, "Great. What would you like to do?" And she's been such a support to me over the years, still is today. That anything she said, Matei, anything she said, I would be like, I don't care what it is. I'll support you. You've supported me through my crazy entrepreneurial career. I'm going to support you. And I know you've done the same with your spouse. She said, I want to open a restaurant. And in my mind, I would be lying if I didn't say, what the hell is she thinking? Like, why would you open a restaurant? It's not going to make money. They all fail. All of the fallacies that everybody have about restaurants and the industry, they were in my mind too. But you would be very proud of me, Matei, because I responded by, that is a phenomenal idea. I love that idea. I think we should absolutely do it. So I said, let's do it. Even though in my mind, I didn't want to. So I said, well, what would you like to open? And she says, well, there's this little brand here in town. They've got 5 units. It's a bakery and cafe. It's kind of the same time that Panera Bread was really exploding across America. People love bakery cafe always. And so I said, yeah, let's go talk to him and see if we can franchise or license or something. So I met with the founders and said, hey, we'd like to put one of your brands up in our hometown here. My wife would like to open one. And as I got talking to him, though, I was intrigued. I said, so you have 5 units. After how long? And they go, we've been around 10 years at the time. And I'm like, okay, why don't you have more? And the response was, we've never really built a team for scale, and we've really not raised or structured capital for growth before. And in my mind, I thought those 2 things are things I've done my entire career. I know how to do that. But I compartmentalize it. I was the CEO of my growing and thriving business in the construction industry, private equity backed. I had Fortune 500 CEOs on my board. I mean, I was living my best life, but I just kind of compartmentalized. I'm like, well, we just want to do one for my wife up in this town. So my wife and I, we bought a piece of land. We built a building, 4,200 square feet, drive through on it, 42 car stall, whole bakery in the back of the house. And we were going for it. We built that, Matei, in 2007 and 2008, and we were ready to open in August of 2008. And if everybody remembers August of 2008, it almost made me relive the dot-com days when that bubble popped, because the world literally, the tech tiles in the world, they shifted in that month of August, where the GFC happened, the great financial crash. Everybody was trying to figure out which way was up. Things were failing every day in the banking and finance industry. And my life was on fire, because if you think about my clientele in my tech business, they were builders that relied on what? A financial system. Homeowners relied on the financial system to buy a home. So we were panicking. And I'm like, great. My wife's restaurant's opening up right in the middle of this disaster. But we was ready to open. So I'm like, that's going to fail. We opened up on October 2nd, 2008. And it crushed it right out of the gate. And I was like, how is that fair? I'm supposed to be the business mogul here. And my wife opened this restaurant. The recession is full-fledged. And she is going into work, high-fiving her employees, big smile on their face, lines out the door. And I'm like, that doesn't even make any sense to me. And the thing that I realized was, when I would go in there to visit her or see how she was doing, and her restaurant was packed, the people in there, they were with family, friends, loved ones, coworkers. And in that moment, when they were sitting around breaking bread, literally and figuratively, they didn't care what was going on in the world. It was not correlated at all. Market was dropping, people were losing jobs, whatever. They were there for a moment, for entertainment and breaking bread with their loved ones or their colleagues. And it wasn't correlated. And I thought it was correlated in my head, because I'd been lied to all these years by just these fallacies. So we get to the end of the first quarter for her, and I look at her financials, and I'm like, oh my gosh, I have never seen a bottom line that has profit in tech. You don't have tech profit. You burn cash to buy and build market share, and you never make money until 20 years down the line or 10 years down the line. And so I'd never seen a profitable P&L. And it wasn't just a couple $1,000s. It was a lot of money. And I'm like, Shauna, this is really profitable. And she goes, yeah, I told you. So we stabilized our business. We sold it actually in the middle of 2009. And it was a success again. We had stabilized our business. There were still large home builders using our technology. It was fine. To this day, 16 years later, that business still exists. I still have executives that work for me at that company, still running the company. It's an incredible success story. But I found myself going, do I do another tech company, which I had a couple ideas, always did, or do I shift and pivot? And I'm like, I think I'm going to take a few months or a year off. I didn't have to work, and I'm going to go join my wife and just learn this industry. And of course, the first week, I'm like, what am I doing in here? Like, I shouldn't be in food and beverage. I'm a tech guy. But I got stung by the bee, and I enjoyed it. I loved it, actually. I loved seeing how happy people were and how fast you could solve problems with people unhappy. They're like, oh, you didn't like that? Well, here's a new one. And then they were happy. But knowing me and my initiatives always in my business were velocity is a moat. I was going to say, I'm going to have velocity here. I'm going to grow. So we went and negotiated the rights to do 5 more, and we built 5 more of them the following year. And I, of course, can't sit on that. So I went back and said, can I do 10 more? I did 10 more. I ended up doing 50 of those bakery and cafes. I built them all ground up other than a couple. It was this thriving $100+ million business. And my wife and I owned it with my team, and it was an incredible success. So that's how we got into it. It was kind of a mistake. It was happenstance. We didn't plan it out, but I got into this industry, enjoyed working with her, and now we've worked 17 years. Over the 17 years, we've done now 14 brands, just under 500 locations, 30 states, tens of thousands of employees, and just under $3 billion in collective sales. It's been really, really good.
That's amazing. How, going back to that very first conversation with the bakery, when they said that they've been doing this for 10 years, they only had those 5 locations because of the 2 issues you identified, was people to scale it and the capital. Like, how did you solve those problems? Like, were those problems for you as well? But it sounds like, yeah, within the first couple of years, you're able to really scale that. How'd you do it?
Yeah, I'll say a couple things about the industry just so that you can understand my answer to that question too. And that is, there really are 3 buckets in this industry. And the 3 buckets are, you and I have an idea, you have your mom and your grandma's recipes, we want to bring it to our neighbors, right? So we start up a concept, we throw in 100 grand, 200 grand, and you kind of just are gritting, you open something. Your neighborhood, your neighbors in your neighborhood shows up, they eat it, and they're like, this is amazing. And then for 6 months or a year, your sales build because people are loving you, and they're bringing their friends and their family and their coworkers because they love you. You're having success. So you're like, hey, we have more money. We're successful. We're being told we should be over in that town 20 miles away or 10 miles away or 5 miles away. So serendipitously, we open another one. That opens, people have the same reaction. Serendipitously, you open number 3. And that happens for several years with brands that are successful. that you've hit a flavor profile, a vibe, a community the right way, and then you build brand and brand loyalty. That happens with, call it 5% of brands. The other ones, they open up, people don't show up, and then they fail. The reason why there's this fallacy, though, Matei, for you and I, that restaurants fail more than all other SMBs, small to medium-sized businesses, which is actually not the fact. They fail less than other industries as in SMBs, so it's a fallacy. But the reason why people think it is because when you and I are driving down the street going to our house every day, and we see Andrew Smith's hot dogs, and then all of a sudden Andrew Smith's hot dogs goes dark and the sign comes off the building, you and I are like, oh, Andrew failed. I just saw it. It went dark. So then we think in our minds, it's really risky and they fail a lot. The reality is that same day, 10 other businesses that were industry, CPG, clothing companies, or tech companies that are off the beaten path that don't have a sign on Main Street, they turned off their lights and they went home and they shuttered and no one knows. So that's the fallacy with this industry, is that you fail quickly a lot. It's really hard. You can't make money. It's not true. So I understand that. So there's the initial bucket of venture, which every venture concept is expensive, and it's an expensive risk to take, because if it's CPG or tech or industry of some type, those are also risky, and so is food and beverage. But if you can make it to 5, 10, 15 units over 10 years and prove that you and I and our spouses and our friends keep going more and more because we love it, that's where I saw the opportunity, because a lot of them hit this wall of saying, I don't know how to go from New York to Jersey. I don't know how to go from New York to Virginia with my concept. I don't know how to go from Utah to Arizona. And that's where people get stuck on a wall, because they're like, how do I support that? And how do I fund it? And how do I structure it? And I knew that that was the gap of me helping emerging brands become the new regional powerhouse brands. And that was the gap I wanted to fill. I knew I had the experience, the courage, the risk, the team, and the capital to do it. And so Savory exists to solve that problem. And again, it was one of those things where you're like, well, how did you come up with the idea for Savory? I looked at it and said, that's stupid. Why do you have all these amazing brands that are better than some of these old brands? They need to grow, but they don't know how to cross that chasm. But I will say this to summarize what I was just saying. The skill set to create something, to curate a menu, a vibe, all of that, that's not me. That's not my skill set. To grow it through tenacity, 1, 2, 3, 4 units and prove out a model, that's not what we do. My skill set is to take something that you came up with, Matei, with your wife, and you're like, we have 5 units or 8 units or 10 units, and to create it into true enterprise value and grow it to 50, 60, 70 units, where there's bigger fish that say, ooh, that's the next Kava, or it's the next Sweet Green, buy it, and then they grow it into several hundred units. It might even take an IPO or franchise it. But under my stead, it's to prove it out and to make it into a regional brand.
And when you do that, how do you think about regional differences, or you're looking for brands that you think in, like to your example, you go from New York to New Jersey to Virginia, or do you end up tweaking some of the things a little bit in order to do that? Like what, maybe you can walk us through a little bit, some of that playbook of what does it take to actually scale this from like 5 units to 50 or 100?
Yeah, so I'll tell you this, something I learned in tech that I've applied in anything that I'm involved in, whether I'm an investor and I'm on a board and we're a manufacturing company making hard goods, or a clothing apparel company I've invested into and I'm sitting with them at the board and they're saying, what advice do you have for us? It's the same thing that applied on all my tech businesses in different industries. It's the same thing that applies in food and beverage. And I think it's a universal truth. And that is, when you run a business, you have to look at people, process, and systems. So those 3 things. Who are your people around the table, and are they competent to carry this business from point A to point B every day? 2, what are the processes that we're using and the systems that are underlying that we use for the process to make it that we're scale ready so that we can be bigger without breaking everything that we are today? Because the eternal truth is too, as you grow, every time you double or triple the size of your business, everything that you think is going to work when you're 3 times the size, it breaks. Your tech breaks, your system breaks, your accounting process breaks, it just breaks. It doesn't keep up. So I'm always looking at, do we have the right people around the table, the right process, and the right systems for scale? So when we come into these brands, we're like, you don't have any of those for scale. So we come in and say, okay, we have to look at this tech, this process of how you run your business behind the 4 walls of your restaurant, to make sure that you have the right tech in place and system in place to do inventory management, scheduling, all of those things to run a profitable business. And if it's as profitable as it can scale, because now we have the people around the table that know how to scale. So We bring those three things to the table to train and teach them, and we work alongside them. We have a 70-person team here that when we buy into a brand, we put our 70-person team behind them and say, Matei, now you have 70 people at your disposal that are all restaurant pros and operational pros. Let us help you get to the size where we can hire the people inside your company as well as scale you. And so that's what we do. That's the secret sauce of Savory. We don't just give the person money and say, here's a piece of, or here's an M80 and good luck. And you're like, I've never held an M80 before. And so you're going to blow your hand off by just giving you a bunch of money. That is not what you do. People don't know what to do with the money. And a lot of times that's why you see failures with investors and founders is you take founders that don't have the skill set to go from here to the next stage, but they give them all this money and they blow their hand off because they just spent the money the wrong way or hired the wrong way or grew the wrong way or grew too fast, which is another problem. And because of that, there's some bad examples of what not to do. Discipline, right systems, process, people is the way you win.
When you say like you got to make sure you're not growing too quickly, are you guys looking, and you talked about the tech as well, as like the sort of like the ramp up on additional restaurants, and are they looking just as good as some of the old ones? Or how do you think about some of the metrics or some of the red flags that you watch out for that you maybe are expanding too quickly or something needs to be changed?
Yeah, so we watch very closely to the consumer rhetoric because listen, we don't have a job unless the consumer is happy. Unless you go into my restaurants and you leave and go, Andrew, spot on, man. The quality, the sounds, the smells, the people, the experience, the hospitality was all hitting on all cylinders. If I don't hear that and we don't see that trend, I mean, you're always going to get people that are like, I didn't have a good experience. I go into restaurants that I love, and 1 out of 10 times it wasn't great. We're all human. We're not perfect. It's just how it is. Tech isn't perfect. I could never get my tech perfect, right? So why would restaurants be perfect? The way though is that the trend is people are happy consistently with our brands. It's ready for more, okay? Because you're doing your job. But 2, culture internal within the business and the team. If your leadership, you're above stores where they don't work in the stores, but they work with the stores to support them. And then in the stores on the front line, if there's not a good culture, you adding more growth to that will break that company. It'll break the company. It'll break the people. So the culture's got to be really good. Everybody's got to be aligned, evenly yoked, and like rowing the boat the same direction, right? And then the last thing is the metrics have to work. If you have a great business and those other things are hitting, culture's good, people are happy, whatever, and you make 2% profit, you can't grow and scale with 2% profit, right? So we look at, well, we want to be 20 to 30% profit. And people are like, you can make that much money? I'm like, well, yes, if you do it the right way, you can. You can make people happy, give them what they want, give them a good value, and you can make money. We've made hundreds of millions of dollars. You can make profit at this. And the best brands do. And so if those metrics are there, it's also ready for scale. So let's add another one. And then when we add another one or another 2 or another 3 or go into a new state, you have to go in with the expectation of we're not going to be as popular here as in the hometown of where Matei is today because everyone knows you after 5-10 years here. We're going to go here. We're going to probably be 20 to 30% less in revenue for the first 18 months. But we expect to be at the same level as these guys in 18 months. And if we are, it's ready for more growth. So you add more growth. If you go too fast, none of that stuff will be in place. Your foundation will not be firm and you will have problems.
Do you also consider the macro environment in this, whether it's the macro environment for food and food taste that change, or maybe we'll start there. Like, how do you think about that? And like, what are some of the trendier things you're seeing now?
Yeah. So for me, we're watching macro always. And the thing is, right when you think you got it figured out, it changes like the next day, month, week, year. We thought 2020 was going to be the worst year of our lives. And in a lot of ways, it was the worst year for all of us. Would it be strange to you to hear me tell you that it was the best year of my career? Like nobody does, they don't even believe me. And I'm like, the reason why is because we said, well, we could just lay down and let this happen to us, or we can pull together, galvanize as a team and figure out how to push through it. So we met every single day during the pandemic. And we figured out what this new CDC laws or rules were for that day. And we pivoted that minute and went out to all of our locations across the country. And we pivoted to make sure that we were compliant, kept people safe, but kept people eating. We were more profitable. We bought 2 brands. We raised another $100 million fund. We opened 15 new restaurants. We shuttered nothing in 2020. And why did we do that? Because you always find a way if you think through it. So when you see through macro, you're like, well, it's really hard, but then do you find a way? There's always a way. I would say I would probably relive 2020 over 2024 again, because 2024 there was pressure from every single angle of commodity prices, material prices, steel prices, construction prices, people prices. It was crazy how expensive it was. So then discipline comes in to say, we can grow faster, but it will be more costly to expand faster. So we're going to slow down, grow a little slower until prices come down on things and things are not so crazy. And so, yes, discipline comes in with the macro environment of what is the best move right now with all the pressures. And so we slowed down. This year, sped up a little bit. 2026 feels like it's going to be a better year. Interest rates have come down. Commodities have come down. Construction costs have come down. So now we've signed a bunch of new deals for our brands, and we're going to grow faster in 26 because we can see a little bit further ahead that it will be a better macro environment 26. So yes, we watch it all.
So you mentioned the construction costs. So are you buying the land and doing the building all yourselves?
So we'll do both. We'll buy land, build a building. We'll be our own landlord. We don't do it as much anymore because it consumes a lot of cash, of course. We're in this for the operational side. So we want to be the tenant. But even if you're a tenant and you take a building that's a gray shell, so it's empty, but it has the four walls and you sign a lease, you've got to go in there and bring all the materials. So if I'm talking steel and lumber and tile and everything else, we have to buy all that stuff. So yeah, we're buying tens of millions of dollars of that material every single year as we grow, because we're adding 60 to 100 restaurants a year in our portfolio now. That's a lot of material. That's millions of dollars. And so, yeah, it affects us. If steel is 7 times the cost, that affects our bottom line on build out. Yes.
What about consumer tastes? Are there any trends you're seeing there?
Yeah, there is. So the thing that's nice is that we serve several million people a year in our restaurants, right? Like this is something that we all do every day. We all eat. So believe it or not, we have a lot of loyalty data, and we have trend data. We see request data as well. And then there's also data out there with Technomic or black box intelligence that we've monitored too, where they gather from hundreds of thousands of restaurants too, and what the consumers are doing. So we do look at the macro, and what we find is there is a trend where people are wanting more Asian cuisine, right? So we've watched that for years. We see that the requests are going more and more up. And there's less and less options because G1 of these Asian cuisines are people that are immigrants a lot of times. They set up a Chinese restaurant. G2 doesn't want to do anything with it. They want to go off and start a robotics company. So they're starting to shutter. But there's more desire for that flavor profile. So in our fund now, we've been looking for the best Asian concepts, and we just acquired one called Hawker's Asian Street Food out of Orlando. 15-unit concept, unbelievable sales, unbelievable vibe. But that's after looking through like 80 different concepts. We buy the ones that we think have the best economics, the best way to win. And so, yeah, we looked at that for years, and then we look for the best brands in that flavor segment. We buy it because they're killing it, and we're going to now expand it. So yes, flavor profile is a big deal to us. We know that Thai is a big deal right now. We know that still Mexican. People eat Mexican food once a week in America, once a week at a minimum. And so we've been very methodical on what type of Mexican cuisine do we want? Do we want sit down casual? Do we want fast casual? Or do we want quick serve? And that's what we're digesting right now.
And okay, so let's take Mexican as an example. When you're looking at new concepts, competing with like Chipotle, Chipotle's probably been single-handedly responsible for making that once a week Mexican meal available to the Americans. How do you think about that? How do you think about a new brand entering a space that has had such great success?
Yeah, it's interesting because we all think about brands we go to. And I have the ones that are, I call it my pinwheel. Like I have the pinwheel in my head. You have it. You don't know you have it, but you do, Matei, because you're like, what do I feel like eating? You kind of spin the pinwheel in your head and you're like, I haven't gone there for a week, or I haven't gone there for 2 weeks. And then you go back. And so for me, I want to get on your pinwheel. The problem is the pinwheel doesn't have 1,000 slots, right? Like you're not going through 1,000 places in your head when you go get in the car and you ask your wife, hey, where do you want to eat? Because we all do that if we're gentlemen and we have chivalry in us still. We say, hey, where would you like to eat? And so the pinwheel goes, and there's probably 14, 15, 16 spaces. One of them will be once a quarter. Another one will be once every 2 months. Some of them are weekly, right? So then you go to the weekly ones in your pinwheel. My job as a restaurateur and an entrepreneur in this industry is to knock one of yours off a pinwheel or push it further down to like once to 6 months. And I want you to come to me instead. And so it's hard, right? So how do you do it when Chipotle might be on that pinwheel? Which, by the way, love Chipotle. I know the founder or one of the co-CEOs, Monty Moran, stud. Love the food. I go there often. It's on my pinwheel. So saying this is not against Chipotle necessarily. It's how do I get someone to come to my Mexican concept and not go to Chipotle as often, or give me a shot for some of those wallet dollars? And it's tweaking it a little bit from vibe to value for money to flavor profile. And if you think about it, you'll go somewhere, you're like, I really like their beef here. I really like Chipotle's chicken there. So what I'm trying to do is find something that's a little bit of a difference, different vibe, different value proposition, to where people go, I really like this place for these reasons, even though I'll still go to Chipotle. This is new and exciting. And what everyone in America is looking for is new and exciting. So that's how we win.
I love this concept of the pinwheel. Do you guys have a sense of how many times it takes for someone to go to a new restaurant before it becomes a habit and it's now officially part of the pinwheel? Say, I
Yeah,
imagine you have like grand openings.
4 to 5 times.
Okay,
We got
interesting.
to get you back. If you come once, it's not enough. I got to get you back again, again, again. And maybe it's a habit, but I got to get you back 4 to 5 times.
And how do you think about that side? I mean, obviously you have to like do everything right for the people to like it and wanna come back. Are there other things like just thinking out like offers, coupons, apps? Like we were actually just talking about this the other week in the office. And we're like a tech office in New York City. And there was apparently like a sale at McDonald's on the app where you can get like whatever it was, like a Big Mac for like 50 cents.
Yeah, yeah.
And everybody, including our CTO, who makes a lot more money than to be excited about like a 50-cent like offer, they all got excited and they downloaded the app too. Cause some of them were like, oh, I need an app in order to do this. I'm gonna download the McDonald's app just to go get that thing. And then we had this conversation about like, first of all, just what does it take? What's your threshold for downloading a new app? And also like when like what does it take to leave notifications on it? A bunch of people confess that they have McDonald's notifications on their phone apps. I think this is might be like, a different demographic than you'd expect it to be like so
Oh,
enticed
those are
by
my
the
demographic. Yeah, those are my demographic too, because I want to get the people that have the money to spend, but I also want to snag them. Listen, the whole app world, it's different too, because people just don't want to keep downloading more and more apps. They kind of went through the phase where we all had like 1,000 apps on our phones, and we're like, I'm not even touching 90% of them, so we all deleted a bunch. We still want you with our app, of course, and the reason why is because I want to build a loyalty relationship with you, Matei, and your CTO and everybody else, to where you value the relationship. And so how you do that is you have to build loyalty. And the loyalty is not just giving you coupons. It's when you come in that you feel like the dollar means something to me and to my business. And I'm sorry, you and I go give dollars. We'll drive a mile further to give our dollars to someone we like more than it's convenient. Tell me that's not true. You will. If it's
yeah.
if it's my restaurant and we know each other now, or it's your restaurant and I know each other, I would drive a mile further to get your donut versus the donut right next to my house because I like Matei. So I've gotta get you to like us, feel loyalty, feel like we care, feel like our communication matters, and to give you some sort of a reward, which is you keep coming in here and I'll give you value for your dollar by a 50-cent burger every once in a while, or a 5 for 1 or a 2 for 1 or whatever. If you do that, it's a thank you. If you do coupon, the problem with that is then you train your customer to just wait for coupons, and then you devalue your business. So couponing your business too much will actually make it feel like a value brand, and then no one looks to you as a high quality brand. It's just a value brand. So you got to be careful going down that slope too much. What they did with their 50-cent Big Mac was they got all of you guys to download their app. That was why they did it. It was worth their cost of acquisition for consumer to get you guys to get the app. Now, every subsequent time they get you in because of a notification, they'll make the money back then. So good on you guys for being tech guys, falling for the old 50-cent Big Mac thing, but now they got you.
That was the whole point of the conversation. I was like, I can't believe this worked. This is like the
Totally worked.
like
Yeah,
easiest like yeah. And to exactly to your point about customer acquisition costs, and all they have to do is just give you a free, Big Mac. It's not even free.
that's right.
To that point about making people feel special and also avoiding deep discounting. One of the things, and I read the book, I forget what it's called. It's about from the 11 Madison Park guys about hospitality. And one of the things that they obviously this is like super fancy fine dining, and they talk about how before people like show up, they will look up the person and look them up on LinkedIn or look them up somewhere and be able to talk to them or say something that makes them feel like, oh wow, you know who I am. And I'm wondering, like, especially given your tech background, like the other thing that I speaking of like pain points. There are restaurants that I order from all the time. They're in my pinwheel. I order from all the time. I don't go in there as often as I should, but I go in there periodically, especially now that I have young kids. And the thing is, like, I'm probably there, if not like top 10%, maybe top like 5 or 1% of their customers, just because I order from there all the freaking time.
Yeah.
And you go in there and nobody knows you. It's not like in the old days when you go in, if I was like that much of a regular, like everybody would know me. But now because I order online, they don't. And they should. Like if they could, and all that's the data's there. They know that
It is
I'm
there.
buying. Like when I make a reservation or when I show up there, I feel like, there should be something in that system. Be like, this guy orders from here a lot. You might not have seen him for the past like 6 months, but he's a loyal customer. I'm curious, like, yeah, like, have you seen any tech solutions that are trying to make the service side of it better, make people feel a little bit more special?
Yeah, they're getting there. I will say the AI. So there is a camera system where it studies people's faces and then recognize them, and then they can like tip you off as a business. There's some security issues around that, so you don't want to go too far because people don't want to be, profiled or judged based on them walking in their image. So there's camera systems that are doing that right now. The loyalty systems can do that. It'll pop up and say this person's got 10 trillion points. It's Matei. He's been here like 5,000 times. Treat this person good. It's the employee being trained well enough to look at that data and actually act on it. The problem in this industry is if you're in a very busy location with high repeatable business, and there's a lot of transients in it too. You think about New York, you're going to have a lot of people that are in just once and then they go off to the other part of the world, or there's a lot of transient people. It's hard for them to do anything else other than smile and make you feel welcome. But in cities where it's like, this dude sees me or this woman sees me twice a week, like they should know me. Yeah, they should know you and they should say, hey, welcome back. I mean, if you did that, you'd be like, oh, they know me. Tech itself, I think, is getting there, is not surpassed that yet. That is a chasm that needs to be surpassed where we can do better as a hospitality industry.
Yeah. Yeah. And you hear all these stories too, even like Starbucks back in the day, we have these baristas that are seeing people every morning and they're doing these personalized little messages on the cups, and it makes everyone feel good. Because at the end of the day, this is very much like a people business, right? And
It's
to your
all of it.
point,
No, that's all it is. I was thinking about a time that I went to New York, or not New York, to Chicago with my family for Christmas. They were older. We didn't do the whole early morning, open up present thing because we're all older now. And so we went a few years back and we went and stayed at the Waldorf in Gold Coast in Chicago. And I walk in, of course, right when the door opened, hello, Smiths. It's like, I don't have like a name tag on. Go up to the front desk. Welcome, Smiths. We're so happy to have you here for the holidays. I'm like, thank you. And then the bellman comes up. Hello, Andrew and Shauna Smith. Let's get you to your rooms. I'm like, how does everyone know our name? Well, they all have these little things in their ear and they're like, the Smiths have arrived. And then all the way up to the door. And then when I come out the next day and come down, good morning, Mr. and Mrs. Smith. It's like, what the hell is going on here? I will forever remember it because I felt like I was with family. Where do I stay now when I go to Chicago? That hotel every time because they actually care. So what you and I are talking about is if we can do that in hospitality across the board, man, just think of how sticky it is now because I don't go any other hotel. I go there every single time. They have me for life.
no, yeah, it absolutely makes you feel really special. And it's nothing more than just saying somebody's name or remembering somebody's
Yeah.
name. And I love those stories. Honestly, I think there's some of these hospitality stories when they're done right, like they literally get you emotional. And
Yeah. Did you?
it's because it really is like you're there with, like you say, with their family, like
With my family.
celebrating something. There's always an occasion and you just happen to be in someone's business, but for you, it's very personal.
Yeah.
And if they can make it a little bit more personal to come to your level, you can end up, yeah, like changing somebody's life with like one small gesture of appreciation or compassion. And it's, yeah, it becomes really,
It doesn't
really
even have to
valuable.
be though, Matei. It doesn't have to be my industry where it is driven around hospitality and consumer interaction. In tech, even a lot of times we as in tech, I would always wait for the fire to burn before I went in with an extinguisher to try to solve it. I feel like I'm a pretty nice guy, so I would try to deal with people with kitten gloves and deal with it in a nice way, both within my business if we made a mistake, and both with the client and apologizing. Why do we have to wait for that? Why do we should take our top 20, 30% of our clients as a tech business and call them up randomly. Say, hey, Andrew, how are we doing? Well, doing great. Like, why are you calling? I'm just calling to say hi and how are we doing? I'm just so grateful for the relationship. I did that with my top 10, 20% of clients in my last business. It blew their minds and we became friends because of it. You don't have to wait for a fire. And just because you're behind a screen doesn't mean that you can't have hospitality in your business. You should call your top clients and say, I care. This matters to me. How am I doing? For no other reason than to build a relationship.
I totally agree. And it's, yeah. And especially like there's something about technology that glorifies the product at the expense of service. God forbid you mention like anything about services and you just get a couple of like lower like valuation points because of that. And yet, exactly to your point, it is, yeah, it is ultimately the people thing, and it's extremely valuable, not just from the feedback that you can get from those conversations, but just because, yeah, you made someone's day a little bit
That's right.
better by calling. Yeah, I wanted to just pivot a little bit. I know before we hit record, you talked about a conference that you put on, and I know you've been in the news recently for basically like doing like Charlie Kirk's last interview and talking about like people, conferences, getting people together. Like politics aside, I'm curious if you can maybe tell a little bit of that story and why it's had such an impact on you.
Yeah, it's been a surreal couple of weeks for me. It was something that I didn't expect, but I came up with the conference because I feel like we all learn from each other. We're having this conversation today. You've been successful in your career too, and I've had some wins along the way, and I still have so much to learn. And so I like to talk to others and say, well, what did you do, and how did you figure this out? And how are you dealing with the headwinds today in the economy? And how are you dealing with employees and their requests and working at home or working in the office and just all of those things that all of us as business owners and entrepreneurs are trying to figure out? None of us have all the answers. We just don't. And so I kicked off a conference 7 years ago called Restaurantology. It's restaurantologysummit.com. And it's for my industry, and it's for founders, entrepreneurs, and CEOs within F&B. So within my industry. We don't have a bunch of people there selling you stuff. We don't have booths. We literally get together, we break bread, we network, we have a conference where I put people up that I think are doing it right or have not done it right and have learned through tough times and now have come out on the other side and they have this war story to talk about of what they learned. And man, we learned so much talking about tech and people and everything that I talked about. So we did that 7 years ago, and this year was our 7th annual event here held in Salt Lake City, Utah on September 10th. And we had a slot in my agenda. We do it only for one day, that opened up, and it was because of a scheduling conflict with one of the people that I was going to interview. And one of the presidents of one of our brands, Houston Hot Chicken, Brian Simowitz, called me and said, well, hey, why don't you want to talk to my cousin? My cousin could talk to you about his business journey. And I said, well, who's your cousin? And he said, well, it's Charlie Kirk. And I'm like, well, I've heard his name. I don't really know him. I know that he's known. And I just said, yeah, I'd love to talk to him. Let me hear his business story. So I got on the phone with Charlie about 3.5 months ago now. And we had this incredible conversation because he's from Chicago. I'm from Chicago. So we talked about our upbringing and talked about sports and we talked about our families. And I said, well, tell me what you're involved in. And he told me kind of about his podcast that he was doing and his events that he was doing and TPUSA. And he talked about businesses he had invested into and real estate he was developing and buildings he owned. I'm like, holy cow, I thought you were just like doing these college things. You're like a business entrepreneur. And he's like, well, yeah, I think so. I'm like, no, you are. And I was just impressed with his mind around business and entrepreneurship. And then he flipped to, well, I said, well, how many people are in your organization? He goes, 1,000. I have 1,000 employees, not volunteers, 1,000 employees. And I'm like, 1,000 employees. I'm like, yeah, that's a good size organization. You're 31. You should come tell that story. And we can learn something about managing 1,000 and, Gen Zers. So he accepted my invitation and he said, well, I'm going to be out there on this date, to do an event at Utah Valley University. Maybe we can just do this in the morning. So we scheduled our restaurantology around that. Or no, he scheduled his event around ours because we had already scheduled our restaurantology on September 10th. He came into town, came into the event. We had a closed venue. It was just us 550 CEOs and entrepreneurs and founders. Talked for about 40 minutes downstairs, just about his trip to Korea that he had just had. Talked about traveling with family and how fun it is. He turned to me and he said, okay, Andrew, tell me how I can help the most here today. Just remind me. And I said, again, room full of us entrepreneurs. We're going to talk about our entrepreneurial journey. We didn't have questions and answers all rehearsed or anything. It was going to be all ad lib. And he said, great. He goes, I cannot wait. This is going to be so exciting. I go, all apolitical. We're not political here. There's not a political audience. Like there's people from all sides of the aisle here. And he goes, no, nothing political. So we went upstairs from the green room and walked out on stage. We had this 34-minute conversation about entrepreneurship, leading Gen Zers, the future of the economy, where we think we're going to lean into as entrepreneurs. I told some of my entrepreneurial story along the way too. It's just two entrepreneurs talking together. It's nothing. It was apolitical. We ended on a note where I said to him, Charlie, what's a quote that you live by? And he shared one. He actually shared two. One a comment, and the other one was a quote that he lives by, which you need to watch it to hear what it is. They were fascinating, especially what occurred right after that. I shared mine, which was one by Epictetus, a philosopher that is, if you want to improve, be content to be thought foolish and stupid. And as an entrepreneur, I think that a lot of times people are like, man, that guy's kind of foolish for trying that. It's the only way you're going to improve is if you're content to be thought foolish and stupid by your peers. And he said, oh, yes, he was a Stoic. He was a slave and a Stoic. He was one of the best, philosophers of our time. And I finished with it by just saying, I appreciate you coming. I know that all of us come from different sides of the table. And I'm glad that we can get together, even in our differences, to elevate and learn from one another. So thanks for sharing us your entrepreneurial journey. He says, thank you for being so warm and welcoming. We stood up, shook hands. We walked behind the stage. And he said, how did I do? And I just said, Charlie, that was amazing. And he goes, good, because I just wanted to do a good job. I said, Charlie, you did great. And he goes, I just wanted to help people. I hope I helped someone. I go, I'm sure you did. That was a brilliant conversation. Thank you. We took a picture. He said, I want to do more of these types of things where I talk to other entrepreneurs. I feed off of their energy. I'm like, well, they'll feed off of yours too. And he said, let me talk to you after my event. And it would be great to do something else like this. I said, that'd be great. Call me after your event. Walked out the back stairwell, got in his Suburban with his team, drove down to Utah Valley University and was killed 50 minutes later.
What a story. And it's fascinating to see, like, to your point about the various sides of people and to learn about the entrepreneurial side of it. Again, regardless of what your political beliefs are, there's a lot that you can learn from running a business from people like that. It's and then they're what a place to put you in, right? To have Charlie Kirk's like last interview. Like, what? Yeah, I don't know. How do you feel about that? I feel like there's an additional like weight that's been placed on this. At the time, this was just another like Japan, just another conference, and now it's got
If nothing
historical
would have happened
significance.
and he was still alive today, no one would even know about my conference. It was a closed setting conference. I don't really also care where people stand on religion. Everybody has the freedom I think that we're born here and we are free men and free women, and we can believe what we want and do what we want. That's what my belief is. And so that's why I'm never like, well, on this side or that side, right? And I think the great equalizer is entrepreneurship. It does not matter what my politics are in entrepreneurship. If I am going through that journey, you and I are going to have some similarities no matter what. How hard it is, how many hours it is, how do you balance life and family, the sacrifices we make, all of it, right, Matei? It's just so hard that the great equalizer for all of us as humans is just talking entrepreneurship and building a business, if that's what you do. And so I do believe that this happened for a reason. I don't know why, but I have always been so pro entrepreneurs and giving it a shot, learning what you're good at, what you're not at, what your demerits are, what they are, what they're not, learning how to build teams and just enjoying the journey. That when Charlie and I talked about that, and now that I'm pushing it out to the world and it's been seen probably 100 million times as of today, I'm getting messages from people saying, I had no idea and I learned so much about entrepreneurship. People that are not even entrepreneurs, that it inspired me and it was unifying. And so maybe it happened for a reason, because I do truly care about entrepreneurs being successful and helping the other generation. I didn't have help when I was a younger entrepreneur. I just kind of figured it out as I went. I want to help other entrepreneurs figure it out and maybe cut some corners of some of the failures. Failures are good because you learn from them, but maybe lessen the potholes that you hit as an entrepreneur. I'd like to lessen them so that more can be successful. And so I don't know, maybe that's the reason. I'm having a hard time trying to figure out why me, but at the end of the day, I don't really care. I'm getting it out to the world because there's something to learn from it. And there's no hate that can be involved in our conversation, because I didn't know this young man. I didn't know him. I got to know him, and I thought it was the start of a friendship from business owner to business owner, not on platform to platform. It was not about that ever. It was just a friendship that was starting, and I was intrigued by his business mind, and you'll hear it in the interview if you watch it.
Yeah. No, I'd love to watch it, and we can post a link to it and our podcast as well. I'm just curious, speaking of Stoics, and to your point about things having a meaning or just consequences afterwards, have you changed how you go about your life, or even like just even like this conversation, right? You just take it for granted. Yet another Zoom call that we're recording, but who knows, right? This could be the last time we talk. This could be,
It could be.
yeah. Have you thought about
I have.
how your life, yeah, has changed as a result?
Yeah, I think that, for the 50 years I've been alive and for the 28 years I've been an entrepreneur, going on 28, I would say that my eyes have been opened that life is precious. Doesn't matter if we're in a car going home today and we get in a fatal car accident, or God forbid someone assassinates someone again. I mean, it's just crazy what's happening in the world. I just think that we say it, but I'm going to really be thoughtful of and methodical about enjoying my everyday. There's days that are tough, but if you put the tough things to the side, what are the things that are really, really great and beautiful about my life is what makes me happy. It's my boys, it's my daughter-in-law, it's my wife, it's my close friends, it's my colleagues. It's the beautiful drive from here to my home tonight because it's beautiful here in Utah now with the leaves changing color for the fall. Step back for a minute and just realize the good things in your life and stop trying to conquer the world in a day, because you can't. And even if you do, guess what? There's always tomorrow. And then what are you going to do? If you conquer it today and you've summited, I hate to tell you, it's a false summit, because there's another summit that we need to be pushing to. So stop thinking that you got to go summit Mount Everest. There's another Everest behind that. And so for me, I'm just enjoying life a little bit more. I'm grateful to be alive. I'm grateful to be doing what I'm doing and to have the experiences I'm having. One of the things that Charlie and I talked about in that is enjoy the journey. When you have an exit, it's so anticlimactic, because now what do? You got to go create another journey. So stop rushing through the journey. Enjoy every day of the journey. That's what I feel.
Well, Andrew, it's been a pleasure having you on here, and yeah, couldn't have wished for a better hour than spent here talking with you. So this was great. Thank you so much for coming on.
Thanks for having me, Matei.
Cool. Yeah, that was great. Really powerful.